new Black Wall Street. Do it right, build wealth, live life, economic empowerment, real tips, insight on the new Black Wall Street. It's on the new Black Wall Street. It's your host.
Hey, Grand Rising City Billionaires. Thanks so much for joining us here today on the New Black Wall Street, the Money and Power Show. I'm your host, ERGJ, your certified financial educator and CEO of ERGJ Enterprises, ERGJ Black Bazaar, and international best-selling author of the book, The Black Billionaires Club. That book is the study of Black wealth. It's a study of the 12 richest Black people in the world today and how they built their wealth. And I just truly believe that if you want to be wealthy, that's a big if, by the way, but if you do, I recommend that you study wealthy people. Well, you can find that book by simply going to the website, theblackbillionairesclub.com, theblackbillionairesclub.com. Click on, and then you'll be able to actually pick up the book here today. Give me just a second, guys. I'm trying to locate this video here so we can make sure that we go live here. Today, we're going to be talking about actually how to buy stock. So there was a request over the past week. And I said that, guys, you guys have any particular questions as we're introducing you to Wall Street that you like us to go over in the show, then that's what we made it available. Give me just a second. I'm doing a watch party. I ask that you do the same as well. Let's see if I can do a watch party or something like that. I don't know. Share. I want to. I can do a share my story. I don't know. I'm trying to see if this thing is going to work. Am I live? Yeah, I am live. Okay. We did that. Now let's see if we can do this. All right. 1 second, guys. Just doing that there. All right, man. Let us know where you connected from, what city, what state. We did that. Let's see if we can. All right, let me know where you connected from, what city, what state, and what country might be connected from as well. Hit the like button and share button if you care. Like button, share button if you care. Our sponsors for today, ERGJ Black Bazaar, the Afrocentric marketplace, where you have your Afrocentric home decor, personal care products, and also Black art inspired gifts. Check out the website, www.theblackbazaar.com, www.theblackbazaar.com to pick up your home decor and special gifts here today. Also, Big Sis Media Group. Big Sis Media Group, the creative design, full service creative design agency, which is going to be able to help you with all your creative and visual and digital media. So if you need websites, flyers, trailers, anything like that, editing, taking care of, Big Sis Media will be able to help you out with that as well. Check them out at www.bigsismediagroup.com, www.bigsismediagroup.com. Let us know who's here today. Go ahead and let us know who you are, where you connected from, what city, what state. Also hit the like button, the share button. We're broadcasting here on Facebook, Instagram, and also YouTube. And for those that are on YouTube, man, go ahead and hit the subscribe button as well. Still looking to increase our subscribership to 1,000, our goal. So you can guys be able to help us out with that. So welcome to Wall Street, by the way. We're going to be taking a look at the markets, take a look at what's going on, and be able to hopefully answer some of your questions that you might have as it relates to investing. We do know that we had a big scare in the market. There's a big talk about the coronavirus, and I guess it's a lethal, deadly virus that's out there. And what we want to be able to do is actually put on the mind of an investor and understand that with threats or with fear comes opportunity. Opportunities to buy things or to invest in things that are relatively great in value, but cheap in cost. And today we're going to be taking a look at Facebook and how you too could be an owner of this wonderful platform that you might be using. Tomorrow, I think I'm going to do Google, since Google owns YouTube. Now, I wanted to start with Facebook, being that I'm on Facebook, broadcast on Facebook, broadcast on Instagram, which Facebook owns. And so we'll start there. But let's start, guys, with news that you can use. What's going on? A.V. Peace and prosperity to you, man. Let us know that you're here. Don't be rude, beautiful people. Don't just watch. Let us know that you're here. Go ahead and click the button. Come on in. Say hello. Good morning to you. We got people talking about money and politics and all that stuff in the morning. Who else is doing this? So at any rate, so we will let me take that off the screen and we'll dive right into the stock market. So I'll take me off screen. Hopefully you guys can see that. Let me see if I need to. I think that should be fine. I think that should be fine. All right. So let's take a look at the news that you can use, guys. That you can use. Let's see here. So what's going on in the market, man? So global stocks rebound. Very big headline there. So if you was with us last week, you heard me say that, hey, you know, this is just a temporary adjustment, making things less expensive, but still of relative great value. And so it's an opportunity to actually get into the market when everybody else is selling. And now we're starting to see some stocks rebound from a global perspective. So when we hear global, that's going to be anything outside the United States. So we're probably talking about China. We're probably talking about South Korea. We're probably talking about Italy. You know, those are the three countries that were mentioned last week when we started looking at the fall of the market. And, you know, a lot of people get fearful, but when people are fearful, that's a great opportunity to be able to pick something up for relatively less expensive. It says, hey, investors bet that central banks will act to help limit the damage from the coronavirus. Yes, they will, right? So we understand that banks, just like with any recession, they make adjustments in their policies to be able to keep money moving. And when money is moving, that means the economy is still pushing forward. No one wants a recession, especially not the banks, because it affects them and their ability to make money off of you, right? Oil prices are dropping fast, right? So what's going on with oil is that there's an oversupply of oil because we found a way to be able to manufacture oil or create oil. So through the shale process in the United States, so we're not reliant on domestic or foreign imports as much as we used to be. So there's an oversupply of oil at this particular time. You might see that at the pump. We'll talk about gas and all that stuff, the price of oil and all that stuff, in relatively a little bit. So here, Chinese, right, manufacturing falls to a record lows. That's pretty important, right? So if manufacturing is falling as far as manufacturing products that most of us use, pretty much anybody that wears anything has something that's made in China. Well, if manufacturing drops, that means that the ability to fulfill will drop as well, right? It doesn't necessarily mean that people are not buying. It just may mean that things are not available, right? So we start to see stuff out of stock. We start to see stuff back ordered. And this is across the board, guys. You think about how much of the world is supplied by Chinese manufacturing. Just think about that for a second. How much of the world is supplied by Chinese manufacturing? So when manufacturing is reduced, then the ability to fulfill is reduced. It doesn't necessarily mean that the demand is reduced. Let me say that again. When the manufacturing is reduced, then the ability to fulfill is reduced. That does not necessarily mean that the demand is reduced. So there could be heavy demand, but little supply. And when you have high demand, little supply, what happens to the prices of products? Think about that for a second. When you have high demand and little supply, well, that's going to cause an increase in the price, because now you have this thing called scarcity, where products are not as available or not as available as they once were. So this is all a cyclical effect. This coronavirus, reducing manufacturing, also reducing the ability to fulfill, and then now you might start to see a rise in products that are not able to be manufactured as much as they were 2 weeks ago. Okay, good morning to you, Ms. Vivian Reed. Ryan Scott's in the house. Thanks so much for joining. Anybody else that may be joining us as well, go ahead and say hello. Good morning to you. Thanks so much for joining us here today on the Money and Power Show. We're talking about money. All right, let's keep going. Good morning to you. All right, so we got sick employees that say the spread of coronavirus shouldn't have come at a worse time for Corona beer. Look at that. So all these highlights, man, I just love reading the headline. Sick employees should stay home. Of course they should, but they may not have sick leave. Okay. How healthcare and social media are teaming up to fight coronavirus. So we know. So if people are getting sick, right, across the world, then that's going to be what? That's going to be a huge positive impact for the healthcare industry. Would you agree? If people are getting sick all across the world, that's going to have a positive impact on the healthcare industry. So my question to you is, if you understand that to be logical, say more people are getting sick, more people are going to the hospital, more people are needing these special type of operations and surgeries to stay alive, then that's going to be more money being more profit, more money, more patients, more insurance coming into the healthcare industry. Now, the impact on the insurance industry might be a little different, right? Because when health insurance has to pay out, that means that they are actually losing money versus people just paying their policies as well. So it's very interesting impact that you have. You have the healthcare industry probably is going to increase in profits. You have health insurance companies or insurance companies as a whole probably decreasing because they're having to pay out more. No, that's the big thing about insurance companies. Insurance companies do not want to pay, right? That's why whenever you file a claim or something like that, you see them go through all of this process in order to keep you from to try to keep you from actually cashing in on your healthcare industry, right? What's going on, James Hudson? Thanks so much for joining. Good morning. See Miss Vivian Reed. Thanks so much for joining. How are you? Rising Price, absolute Miss Brittany Jr. Thanks so much for joining as well. So that's why insurance companies really don't want to pay. They really don't want to have to come out of pocket at your expense. They're not really in the business to keep you alive, keep you healthy, keep your house. They're in the business to make money. They just do it from the insurance side. And their risk is that, hey, more than likely you're not going to get sick. More than likely you're not going to need their money. More than likely you're not going to actually not their money. You're not going to need your money that you paid into those insurance companies month after month, year after year. You're more than likely you're not going to need that back. That's what they're banking on. Would you agree? That's the whole essence of insurance, to then be able to provide resources to you when you need them after you paid them an abundant amount. I think it's one of the biggest gags ever created, but it's useful in its own light, right? So we have the travel industry, right? Travel industry. Everybody putting comments on travel. The travel industry. So you have the travel industry, which impacted major, right? You have travel, which would include flying through the air. You have travel, which would include by ship, right? Because everybody's scared, right? So nobody wants to take a cruise to, no Mediterranean cruise, go over there for no particular reason. If they know that they're dealing with all this sickness, they don't want to come back with a third world sickness, or at worst, not even be able to come back because they've contracted some type of virus that won't allow them to come back into the States. No one wants to travel. When you have people traveling international, things like that, and they might be bringing this sickness over here with them or in them. Nobody wants to travel. Matter of fact, a lot of people don't even want imported goods right now. They're saying, hey, if it comes from China, I don't want it because it could have a little anthrax or coronavirus in the package. So you have the travel industry, which is going to be impacted severely. So if you are an individual who is, who likes to play shorts or plays short-term positions, it should be very easy to see, okay, I probably need to be short in travel industries because they're not going to have a big profitable quarter. They may bounce back, once all of the fear subsides, but more than likely they're going to have a short-term negative impact on their values. Would you agree? Right? Would you agree? What's going on, Miss Vera, travel industry, right? So this is all about reading, news and interpreting, and that's what I like to call it, interpreting the news. So that I can have a logical, you think straight about the future and what may be happening when it comes to what I'm gonna do with my money. That's what it comes down to. What I'm gonna do with my money. What you're gonna do with yours, I don't know. I don't know what you're gonna do with yours, but what I'm gonna do with mine. So we have Chinese officials taking control of one of the largest. Oh, what's this? I didn't see this one. One of the law, I'm gonna have to read that one and bring that one up. Startup raised billion. I don't want to read that either. Okay, let's go right into the markets. Let me read this one thing. We'll go right into the markets today. What happened on Friday? All right, so let's see here. Chinese officials are taking control of troubled airline operator HNA. Okay, so I hate these pop-ups, by the way. It's gonna pop up and start playing. All right, so we have. The Chinese authorities are stepping into one of the largest conglomerates as it struggles to overcome a massive debt crisis made worse by the novel coronavirus outbreak. So government officials in Hainan province established a working group with other agencies to help solve H&A Group's financial woes. The company said in a statement Saturday, the move was made in H&A's request, it added. So H&A began life as an airline, but grew rapidly through investment in the real estate and finance and overseas acquisitions to become one of the most important players in China's private sector. So the government is going to be taking over this group's, going to be taking over for this group and running this company. This has a major impact on Chinese investments, or I guess airline, real estate, and finance. Now think about this for a second. Why would a government decide to take control, take over some companies, some private companies' management, right? Why would the government, any country's government, decide to manage some private company? That's almost like, if you guys remember the NBA, I think it was the Clippers at one particular time. They didn't have an owner, so the NBA was running the team, right? Why would some government or some board decide to take over and or run some company and or team? Why would they do that, right? What would be the benefit? Why would they decide to do that? Well, it has to be because this particular company, with all of its acquisitions and what it runs and controls, must have a big impact on their economy, right? If it was some mom and pop store or something that really didn't make a big difference, they would not step in to run the company or to be able to assist or do whatever they're going to do to try to keep the company afloat. So clearly, this particular company, this H&A Group, has a big impact on the Chinese economy, and the government is saying, hey, we can't let this company fail, right? The same way the government for the United States said we can't let the big banks fail is the same way that they're saying the government of China is saying about this group, the H&A Group, saying that, hey, we can't, what's going on, Sparkling Ray? We can't let this company fail. Isn't that interesting? Stepping in for the company. We've seen it before. Really thought about it, their products may be infected. You really thought, yeah, that's just fear, Miss Vivian Reed. That's just fear. Of course. Now, that's why we have customs, by the way. So if you are fearful about products that you might use that come from overseas, China, South Korea, Italy, or something like that, then that also would say that you don't really have a big belief in our customs process, right? That anything that comes over the border through customs is cleared. So if it could clear customs and the people in the customs area aren't getting, sick and stuff like that, then hopefully that would alleviate your concerns if you believe in our border patrol, if you believe in those government processes, right? So that's just another fear tactic, right? It's all meant to keep you in fear. That's really what the whole thing is, right? But hopefully, if you have any faith in that process, then that won't concern you as much because everything's got to go through customs to get over from China to the United States. It's got to go through that process. It got to clear all their checks and balances. It's probably got to be a shot to make sure they don't have any type of they probably be shooting the products like they be shooting your arm when you travel or you come back. You ever had that happen? Anybody travel overseas, come back, got to go through customs, and they got to give you some type of medical shot or a medical shot before you go to make sure that you don't bring any of their stuff that they're concerned about back over to the United States and infect a whole lot of other people. Or same thing happened with packages as well. Got to go through customs. Hey, here's what's going on with the market, and we'll get into our discussion about how to buy stock. So we're going to talk about Facebook today and how to buy a stock of Facebook. Hit the like button, the share button if you care. Hit the like button, the share button if you care. We're talking about money in the morning, talking about the markets and what's going on with news that you can use, okay? So here's what happened in the market on Friday. So it's Monday. It's Money Monday today. Everybody putting comments on Money Monday. And we have, they're talking about stocks rebounding, which when we look at this, you guys are going to be like, wow, he was like right on as far as timing is concerned. And we can see a bounce back. When we see a bounce back or a rebound, everybody putting comments on rebound. When we see a rebound, what does that mean? That means that things have gotten back or are getting back to where they once were, right? If you rebound in a relationship, if you rebound in the market, right? That means that things are getting back or on their way back to what they once were. And what were they? Well, what they were, we will be rebounding from getting back to this long-running bull market, bull market, which means that the valuation of the prices of values of companies going up and up. We're getting back to all the way back from when Barack Obama was president. This is almost, I think this is 10 years of increase in the market, right? 10 years of increase in the market. We're getting back to that. So if we're going to be rebounding, and that's what it sounds like they're using that term rebound, then that means that for me, if I want to be a part of this rebound, if I want to participate in this rebound, I have to get me into a position that I can rebound. My money can rebound with the rebound, right? That my money can rebound with the rebound. In other words, buy low, sell high. I don't want to buy when it's back up high again. I want to buy now, right? When it's low, I catch it on the rebound. Just like when brothers and sisters, y'all get into these relationships, y'all be catching people when they are vulnerable, when they're emotionally vulnerable. You're catching them on the rebound. Well, we want to catch the stock market on the rebound. We want to catch our money and the possibility of our money increasing on the rebound. Same idea, right? Everybody got that? Same concept there as we're talking about the rebound. So let's get into this thing. So the stock market was down. The Dow, which is the Dow DOW, which is the Dow Jones Industrial Average, which represents 30 companies in America, just America, the 30 most significant companies in America. It was down 357 points, or 1%. Now, this is actually, although it was down, this is actually a good sign, because previous days in the market, it was down 4% and 4%. It was like 3 days of 4% down. Now it's starting to kind of settle. And although we're still down a little bit, we're still down on Friday, starting to settle, we might see our first positive day today. I'll be interested to see what happens today. We might see our first positive day. Now, the NASDAQ, which is where a lot of technology companies, Amazon, Google, things like that is, that was actually flat on Friday. So its bleeding is starting to stop. The S&P 500, which represents 500 companies or so, which is a benchmark, it was down 24 points, or 0.82%. So its bleeding is starting to stop. Everybody putting also the bleeding is starting to stop. The bleeding is starting to stop. So the rebound stops the bleeding, right? Puts the little Band-Aid on, right? And then we go through the healing process. And I would like to catch things on their way when the healing begins. Because while everybody's talking about the amount of money or the loss, the drop in the stock market, or the drop in the values of companies over the past week or two, I'm like, okay, now I'm ready for the rebound. I'm ready for the rebound. So we got global stocks fall, all these different central banks. We already read that. Oil prices dropping fast, blah, 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 blah. Equifax still has been increasing over the past 2 weeks. Man, we take a look at Equifax. Y'all gonna be like, wow, Equifax, obviously a credit reporting agency. Many of you guys might not have known that you can actually invest in Equifax, right? Which sells your information to people, to companies that want to use it. But Equifax over the past has actually a rebound. But over the past month or so, we saw Equifax get all the way up to about $160 per share. Very interesting there. Not interested in Equifax myself, but nonetheless, I think that's an interesting story. But it was up 5%. Got NetApp, all these different companies down. We have now, look at this sector performance. All of this red, right? That's blood in the street. So look at all these different sectors, right? Energy, right? Energy minerals. That's where oil and gas is. Wind, power stuff. That's been down 20%, I think, for the year. I'm not quite sure what their time frame is for that. Transportation, which we just talked about, a big impact, a big negative impact from the coronavirus. May take a while for transportation to rebound. Finance has been down. Health services, which I would say health services out of all of these is probably going to be the quickest to rebound, because it's got the influx of money coming into it, being that people are sick. Right? Consumer non-durables. That has something to do with transportation as well, right? Because if you can't transport the products into the countries, or import, you can't export from China, and you can't import from China, It has an impact on the sales that you can get from those Chinese products. In the comments below, I'd like for you to share one Chinese product that you actually use. What's something that's made in China that you know you use all the time? You wear all the time. I don't know, something like that. What's a product? Something that's manufactured in China that you know that you use. Great thing to think about this morning. All right, let's keep going. So you got electronic technology, which I think electronic technology, again, a lot of electronics come from China as well, right? Commercial services, retail, trade, utilities, which I think will bounce back pretty fast. Communications, that's going to be all your wireless, your phones and stuff like that, your services and things like that. But all of these have been down, but the worst of the worst has been energy and transportation. Now, let me ask you this. Between those two, that's on the bottom, energy and transportation, which one of those two sectors do you think will rebound the fastest or the quickest? Which one of those two do you think will rebound the fastest or the quickest? Energy, which is where oil and gas and stuff like that is concerned, is in, or transportation, when we talk about airlines and cruise, and we talk about big trucks, and we talk about semi industry, the semi trucks, things like that, transportation, logistics, freight. Which one of those two do you think will rebound the quickest? This is a great question to ask this morning. Everybody put in the comments. So one of your thoughts, we're going to do a little poll here between energy and transportation. Right now, interesting thing is transportation actually benefits from energy, right? They got to use oil and gas in order to some type of power to transport this stuff. But nonetheless, which one of those two industries do you think will rebound the fastest? That's my question to you this morning. That's my question to you this morning. Which one of those two? Put one in the comments below. What's going on with Sparkling Ray over at Instagram? She said energy, because transportation needs energy. So she says, hey, I think that energy is going to bounce back the fastest because transportation needs energy. Anybody else? Which one of those two, between transportation and industry and energy, do you think will rebound the fastest? That's my question to you. Let me see what you guys got to say here. Man, we're going to have a little class participation this morning on the Money and Power Show. I still got 30 minutes to go, by the way. That's tough, but I'll go with energy. A.V. said, man, that's tough. I'll go with energy. Anybody else? Which one you think? We got two energy. Anybody else? They say, hey, of these two, transportation and energy, which one do I think will rebound the fastest? Energy. Ryan Scott says, man, energy he thinks will rebound the fastest. Energy because travel takes energy. That's what he said. Okay. So you guys are saying energy. Wow. That's a great question. Now, let's think about this for a second. Let's think about where we are. We're in March, right? This is the beginning of March. The end of the first quarter is this month, and then we move into April. And April is when we start moving into what? Spring. We're moving to spring and summer. That's when most people are traveling the most. So I would actually say travel or transportation. Let's also think about this. The manufacturing that's taking place that's been halted, it's got to rebound. And then the manufacturing rebounds, then the transport of those products has got to move as well. People are going to start flying in the spring and the summer. They're going to start taking their cruises in the spring and the summer. They're going to be taking their vacations in the spring and the summer. So the airline industry should boost in spring and summertime. The cruise line industry shall get back on track as well. Obviously, they're going to not have to move those products that are now being rebounded or revamped back up as well. I actually think the transportation industry will actually rebound faster than the energy industry. Another reason why is because energy, as I mentioned earlier, if you guys don't remember me saying that a lot of energy, or particularly oil, there's an oversupply of oil. So the coronavirus did not stop the energy industry from manufacturing or mining or anything like that with energy. So there's an oversupply. If there's an oversupply of a commodity, then the values of that commodity, anything associated with that commodity, is going to take a longer time to recover or rebound, because the levels of supply, or the levels of that supply, has to go through it first. Now, I think that the energy industry will rebound, but I think it's going to take longer for it to rebound, a long-term approach, than transportation, which people are ready to take their vacations. They've been, they couldn't go nowhere, or they had to cancel their plans from before. They're gonna be ready to start moving around, and we're gonna be ready to start getting a lot of these products that have been, the Amazons of the world, the eBays of the world, the UPSs of the world, the FedExes of the world. They're going to have to start moving a lot of these products that are now going to be start ramping up as far as production is concerned. Then you have to spend on travel so they can buy the energy. Yeah, that's true as well. But again, if there's an oversupply of a lot of the energy, of a lot of the energy that we use, then until there's a shortage of that supply, or there's at least it's a lot of usage of that supply, of that commodity, or that or anything like that, then you really won't see. When we compare the two, I just think that transportation is going to get back, you know what I'm saying, it's going to get back into the flow, with the banks doing what they can to make sure that these companies are still popping out products, with them having clearance for the borders between, China and customs and international trade, right? The energy will be used, but I think that transportation is actually going to get the biggest boost, and another reason why, because they've had the biggest hit, right? Typically, the biggest rebound comes from the biggest hit, and honestly, if we've been looking at the market for a while, energy has been down. It's just although we might see on the screen, we might see 20% down, right? Energy was about probably like 6% down before the big hit. Transportation, which we see, is about 12% down. It was actually up. It was in the positive. It was in the green before we saw this big hit. So I think transportation took the biggest hit from this virus, situation than anything. And typically, the biggest hit is going to have the biggest comeback. Typically, the biggest hit is going to have the biggest comeback. But that's just my thought. We all got opinions. This is all conjecture, something to think about, man. But I think we can't go. I think you can't go wrong in either one. Now, look at this. Commodities, right? Commodities, we're starting to see oil got all the way down to $45 per barrel, right? It's up 1.72% on Friday. Gasoline, which was down about 169 per gallon of regular leaded gasoline, it jumped up 2%. Gold, right? Another commodity, which would be in precious metals, it's back up to $1,600 per ounce. Corn is up to $370 per bushel. So we have some commodities which are actually starting to rebound, starting to settle. As of Friday is concerned, we'll see what happens today. Now, if you've been looking at your, if you've been looking at your IRA, your TSP, anything like that, your retirement accounts, you'll know that this beginning of this year has not been good, right? Right? It's probably been some decline in some of your accounts. The Dow's down 10% for the year. Nasdaq down 4.5%. S&P 500 is down 8.5% for the year. But we can expect this to turn around roughly within the next month. And as I've been saying, I'm looking to acquire. I'm looking to buy while other people are looking to sell. And we see here the emotion in the market is extreme fear in the market. Well, if you begin to understand, investing philosophy simply tells you to buy when other people are selling, to be greedy when other people are fearful. And we have a lot of fear in the market. So what does that give us the indication to do? Give us the indication to be greedy, to go find something to buy, hold on to it for the next 2 months or so, 3 months or so, and then be smiling all the way to the bank when this thing happens. Now, for those of you guys that don't really understand exactly what we're talking about, you guys looking at this like, man, this is interesting stuff. Well, guess what, guys? We actually have an investment club that you can decide you want to be a part of coming up here in the next couple of months. So we formed our investment club last year. We have these conversations regularly. And if you don't want to invest by yourself, you can invest with us by being a part of our open enrollment process. How do you do that? It simply starts by you joining the Black Billionaires Club to become eligible for our investment club. So if you're saying, hey, you know what? I want to get into the investing this year. I want to begin to understand this language, this conversation he's having. Hopefully, I'm making it as clear as possible for you. But you want to dive into this more. You want to start to learn how to make your money work for you. Well, join the investment club. And the way that you can do that is by becoming a member of the Black Billionaires Club to give you access to it. And you simply do that by going to the website, theblackbillionairesclub.com. That's right, theblackbillionairesclub.com. Here's the deal. Here's what I tell people all the time. If you could do it by yourself, it would already be done. Yep. If you can learn about this all by yourself, you'd already learned it. If you could do it by yourself, it'd already be done. So stop trying to do it by yourself. Join a group of people who understand this stuff and can help you to understand at a much faster pace, so you can start to make sure that you can leave an inheritance to your children's children. All right. Now, what we're going to talk about now, guys, let's get into Facebook. I know you guys are kind of tuned in to get that, but I wanted to make sure we did a good job of breaking down what's going on in the market over the past week. This was on Friday that we're looking at now. And I want to talk about how to buy stocks. So somebody asked this question, last week, and I told them, hey, I'll cover it today. I don't know if she's here or not, but maybe she'll catch the replay. If you are individual, you're saying, man, I've been wanting to learn. I'm gonna do my best within the time that I have. I think I got about 10 minutes left to kind of go over some things. I may have to pick it up and finish it tomorrow. But how to buy stock? I really want to take a look at Facebook today, since we're on the Facebook platform. We're on Instagram, and then kind of go from there as far as kind of sharing with you guys this little bit of information. So let's do that. So let's hop into Facebook. How to buy stock. All right. So first, I always tell people, it's important to understand what you're buying, right? Everybody putting console, understand. It's one thing to go and buy something, which a lot of us do. We buy stuff not necessarily understanding what we're buying. But when it comes to assets, when it comes to, buying something that you believe is going to bring you value over time, it's important to understand what you're buying. So I always start by reading the profile, understanding exactly what is Facebook and what is it that I'm buying, right? Well, number one, they're in the technology services sector. We looked at that earlier. They also are an internet software service. Many of us understand Facebook to be something as far as social media is concerned, but they're much bigger than that. Facebook is a $545 billion company. Let me say that again. Everybody put it down, so 545. Facebook is a $545 billion company. Right, a multi-billion-dollar company. So if you're investing in Facebook, you're investing into a $545 billion company. That's one of the first things to understand. I'm investing into a $545 billion company. That's before I even start looking at the price. Before I start looking at any of that stuff, I need to know what I'm buying. Right? Facebook, is a firm, is a social networking company. They own. Right? Facebook, they own Instagram, they own Messenger, they own WhatsApp, and they own Oculus, right? So Facebook, we know what that is. Instagram, pretty much we know what that is, right? Many of us didn't even know Facebook owns Instagram. So whether you don't like Facebook and you like Instagram, it don't matter, because you're using Facebook's product. Messenger, right? Many of us are doing business on Messenger. Many of us are sending money via Messenger, sending text via Messenger, doing business via Messenger, right? Have our businesses typically now, if you're a small business, you might have a little indication that says, hey, a chat button that's connected where people can message your business. So we're using Messenger. Many of us are using Messenger. WhatsApp, for those that are doing international business. You understand that WhatsApp is an application on your phone that allows you to communicate with your international compadres pretty much for free, without having to pay long distance anymore. We in a whole nother age of technology. How many guys got WhatsApp? And you got people in Africa or people in China or people in your home country, and that's how y'all communicate. Y'all can do FaceTime, chat, and all that stuff on WhatsApp, right? For free. No longer having to pay, the long distance charges that we used to have to pay in order to communicate with people internationally. Oculus is something I haven't dived into, but I understand what it is. It's a virtual reality, virtual reality, stuff. I can't think of the name, right? So it's important to know what you're buying before you buy, understanding what you buy before you buy. And so we understand that Facebook is a $545 billion company that owns Facebook, Instagram, Messenger, WhatsApp, and Oculus. Now, my thing is, if you're using all of those different products, if you're using Facebook, if you use it at some point in time, you use Instagram, you've used it at some point in time, you use Messenger, you've used it at some point in time, possibly you've used WhatsApp or you've used it at some point in time, and maybe, probably Oculus you might not have used, but if you have, then you got to ask yourself, am I willing to invest in the company that provides the stuff that I use? Great question to ask this morning. Am I willing to invest in the company that provides the stuff that I use? Because every time I use it, I give them I make the company that provides that which I use more valuable. Every time. Even right now, us broadcasting on Facebook, we're making Facebook more valuable. Think about that for a second. Every time I hop on Facebook, every time I hop on Instagram, I make Facebook, the company that provides the product or the services that I'm using, more valuable every time. Why? Because what they have is your attention. What they have is your attention. And your attention, as well as your data, by the way, is very valuable to other people, i.e. the businesses that want to capture your attention in order to capture your money. So Facebook is able to leverage your attention as being one of those billion users who uses their platform every day to get other people to pay to have access to you. That's why when you hop on Facebook, you might see an ad or some type of thing in the bottom, or you might see some Google Analytics or something like that. Or when you scroll up long enough, you start seeing some products or some services, because those people are paying to put their stuff in front of your eyes, and they know your eyes are glued to your Facebook, Instagram platforms, timelines, stories, stuff like that. Is this making sense to anybody? Is this making sense to anybody? So let me keep going. I'm probably not gonna be able to finish this day because this is a long little this is not a long conversation, but I got to get into the how-to. I got to really start off that way. And this is Monday, so I want to really just kind of set the tone. Now, Facebook, as we see over here, we see the price of Facebook as it stands right now, $192.47 for one share of Facebook. One share of Facebook. Now, some of you guys might say, oh, you know, it's high, expensive. I don't have, whatever. I don't know what you might be saying. But we know that in our community, we'll spend $200 just like that on something that might not increase in value. We'll spend $200 on some Nikes or on a phone or something like that, which might not increase in value. But it's all about understanding that, man, am I willing to buy the golden goose? See, the goose, think about this for a second. Many of us, everybody put in console golden goose. Many of us would rather buy the egg, the golden egg, and be okay with that, right? But that's only one egg. And you might be able to capitalize on that one egg. You might be able to use that one egg or whatever the case may be, but that's one egg. But why not buy the goose and take care of the goose? That way you can have multiple eggs, multiple golden eggs, and then every now and then you might get a bad egg, right? So buying Facebook or investing in Facebook, which is actually ultimately buying a share of Facebook, is like buying the golden goose. And you got to ask yourself, would I rather have the goose, the golden goose, or just one of the eggs? Would I rather have the goose, which lays the eggs, or just the egg itself? Right? Starting to make a little sense around here. In case y'all don't know, I am a certified financial educator. That's why I'm able to kind of break stuff down. Wham. Now we see that Facebook's down 6% for the year, right? Again, many of us will say, hey, man, you look at this price, you right, whatever you might say about it. But let's keep going. We see down here employees. Facebook has increased employees over the past 5 years. If you're increasing in employees, that means that you got a lot of business that got to get done. And so they're doing a lot of business. They're employing a lot of people, and they're increasing their employment every year, which means that they're growing, expanding, more opportunity, paying more people, doing more business every year. right? That's signs of growth. Everybody putting console growth. So Facebook has grown to $192 per share. And we can see some of that growth within their hiring of people to help them do more business. That's pretty understandable, right? If you were growing, you'd be saying, hey, I might need a little help. I can't do it by myself no more. You might have to hire somebody. Well, when you're a $545 billion company, you're probably saying the same thing. We need more help in order to be able to handle these different departments, to be able to take care of customer service. Well, they really need some help with customer service, by the way. And all these different companies that they own and run and operate, they're basically saying every year, man, we need more help. Right? 8:46, man. I got to run. Man. I got another show to do. Oh Lord. I didn't know. But anyway, let's take a look here real quick. And I'm gonna finish this. I'm gonna do a part 2 tomorrow. I just want to whet your appetite, I guess, today. Go over the market. I won't be able to finish this in one day. Because this is good stuff. And if this is good stuff, man, putting console is good stuff. If this is good stuff, let me know that this is good stuff. What I want you to see here, guys, though, is that Facebook has grown to this particular position. It's $192 per share right now, which is actually a decline of 6% over a year to date, right? But over the year, right, which is from March 1st of last year to March 1st this year, up 19%. So although Facebook is down 6% since January of this year, it's still up 19% since from this time last year, right? I see a great opportunity, right, to buy Facebook. Over the past 3 years, which is March 1st or March, beginning of March is a year ago, up 38%, right? And that's with the decline of 6%. So we take that 6% and go back up, we're talking about 44% growth. And over the past 5 years, we see Facebook, many of us have been using Facebook for this time frame, 143% growth, right? Which means that if you would have invested in Facebook 5 years ago, your $100, $75 at that particular time, whatever it was, would now be up to $192, which means that you would represent 140% growth of an investment. Now, your usage of Facebook, your usage of Messenger, your usage of Instagram, your usage of WhatsApp, your usage of Oculus, your usage of the golden egg, more than likely has not netted you 143% return unless you are using it for business. How many guys right now that are joining us here live on Facebook, YouTube, or Instagram, you're using Facebook for business? You can say that, hey, I may not have grabbed 143% over the past 5 years, but I have gained in profit because I've utilized this platform, right, to increase my business, to increase my revenue, to increase my sales, to increase my connectivity, to find more customers. How many guys are out there have been using the golden egg? Facebook itself, the platform, or all these different things that they own, you've been using it to acquire customers, increase sales, and you have seen an increase of your revenue, which is sales, or increase in your profits by way of utilizing the golden eggs that Facebook has created or they own to your benefit. Oh, yeah. Oh, yeah. Right? So one way that you can be using golden egg is actually increasing sales, increasing customer acquisition, to increase in profits. But another way, which would not have to take all of that active, what we call it active, active work, right? Is to actually own the golden goose itself, which is Facebook. And then while you're working on the top end to increase your revenue, to increase your customer acquisition, to make more sales, to utilize this stuff, right? Your money could have been growing as well. So that would be like double and or triple or quadruple for your trouble, right? To have your money growing while you're working on your while you're working on your cash flow, while you're working on your your day-to-day, your money is over here, out of mind, out of sight, growing to the tune of 140% over the past 5 years. And then you come back and you look at your portfolio where you invested in Facebook, right? And then you also look at where you have from a passive standpoint. Then you look at where you have invested as far as your time, as far as your study, as far as learning how to use this thing to grow, right? In order to capture customers and make more sales. You look at that, you be like, wow, look at what happened. Which one you think would have grown the most? Now you probably would have grown a lot as far as your knowledge and as far as your understanding strategy. But man, when you start looking at the monetary growth, you're like, man, that's 140%. That thing just been growing and growing and growing. And over here, I still feel like I'm broke. Hey, so here's what we're going to do. Hit the like button, share button if you care. We're going to be back tomorrow at 8 a.m. I got another show I got to do at 9. So I won't be able to go through everything. We just want to do a quick, I guess I only had time to do a quick intro into understanding what you're buying first. And then we're going to go through the mechanics. Everybody putting down some mechanics. We're going to go through the mechanics tomorrow on, okay, well, how do I actually buy a share if I want to buy a share? So tomorrow we'll go through the fundamentals of Facebook, which is understanding it more. And we'll go through the mechanics. Okay, what do I do to actually go and buy a share of Facebook if I wanted to buy a share of Facebook? And I will see if we have many ways to do that. Okay, so we'll finish that up tomorrow, Tuesday. And then what I'll do is on Wednesday and Thursday, let's go through Google. Yeah, since we're on YouTube, Google owns YouTube or Alphabet owns YouTube. Let's do that because Alphabet owns Google and stuff. I think that's how it works. Yeah, Alphabet. So we'll do that. We'll go through, we'll finish up. Hopefully we finish up Facebook tomorrow. And then we'll start looking at Google on Wednesday and Thursday. Since that's another platform that I'm using, which is YouTube, and how to buy Google if you want to buy Google. All right, so again, guys, here's the deal. If you got any questions for me, right? You're saying, hey, man, I focus on investing. Typically, I'm a certified financial educator. But if you have any questions about money, I want to be able to incorporate some of the things that you might inquire about in my shows, right? Or in these shows, these presentations, or the Money and Power Show. Which is presented to you by the New Black Wall Street. Some people call and ask me about funding, or they call like my mom just bought a car. She wanted to have questions about that. You got questions about savings accounts, investments accounts, stuff like that. If you got questions, what I look to do is to be your virtual financial compadre. I'm not an advisor. Okay, I'm not an advisor. I'm a teacher. I want to make sure that you go into whatever financial situation that you're looking at, you go in prepared, you go in knowledgeable, so that you don't get taken. Okay, our people perish for lack of knowledge. So if you're lacking knowledge and you're lacking in knowledge in some particular area as it relates to money, and you got questions, all you gotta do is inbox us, ERGJ Enterprise, on Facebook and or YouTube and or Instagram. And I will try to incorporate the answer to your question in one of the shows, which means you got to tune in because I won't tell you what show I'm gonna do it on or whatever, because I might have to do some research. But I'm willing to do that for my people, for all of our followers as well. If you like the content we're bringing as well, and you're saying you want to support this channel, you can do it a lot of different ways. If you're on YouTube, just hit the subscribe button. If you're on Facebook, you also follow us on Facebook on ERGJ Enterprises. But then also, Facebook has opened up subscriptions for fans, right? You can subscribe, say, hey, you know what? Not only do I find this valuable, but I'm gonna put my money where my mouth is, because I want to make sure that this continues and we can support this brother that's trying to bring this information, this financial literacy to our community. Well, we say ain't nobody bringing it to our community. Well, that's the way you can do that as well. And then the other way is if you want direct access. Then it's called Join the Black Billionaires Club by simply going to the website, theblackbillionairesclub.com. For those that's in the BBC, go and put in console #BBC. Tonight we have our introduction into the CBD market webinar. So in case you guys did not already, your register, make sure you do that. It's going to be tonight at 8 p.m. Eastern Standard Time. What I'll be doing tonight is actually presenting to you an opportunity for you to get into business with me, so that we can get rich together, right? That's what I'll be presenting tonight. As you guys know, anytime I come across an opportunity, I try to present it to you guys. Not everybody takes advantage of it. Some people do, some people don't. If it's for you, if it is to be, it's up to you. So we'll have our webinar tonight on the CBD industry and how to get into it. and an opportunity for you to join with me as I find this industry to be a place where we can make some serious cash and we can increase our cash flow. Hey, what'd you learn today, man? Was this worth your time, man? In the comments below, let us know what you learned tonight, man. How much is Google stock? Hakeem Burnett, we will be going over that on Wednesday. Make sure you tune in Wednesday. How much is Google stock? Make sure you inbox me these questions. I won't be able to, can you buy just one share? Does it have to be multiple shares? Thank you. I'll cover that tomorrow as well. As fact as well. Yeah, I got you, Miss Agent. I'll cover that tomorrow as well. Can you buy just one share? We'll answer that tomorrow when we go through the mechanics of how to buy stock. Hey, beautiful people. I want to say thanks so much for tuning in today's episode of the Money and Power Show presented to you by New Black Wall Street. I want you guys to remember this, that it takes a village. It starts with us. Let's build as we climb together. We all we got, beautiful people. Matter of fact, we all we need. And thank God that's more than enough. Until next episode, which will be tomorrow, 8 a.m. Eastern Standard Time. Tune in to the Money and Power Show. Get your questions answered about money, which would be economics, finance, capital, and power, which I'm still searching for some people that are going to be able to help us in the political area as we're getting ready for, voting and all that stuff as well. We'll bring on some guests as well. And if you know someone that needs to be on this show, make sure you recommend them, man. I am looking for people that can talk to us, to have, conversations with us about these topics to help us understand greater what we don't know. Hey, guys, until next episode, you know what time it is. Mr. DJ hits the music.
The new Black Wall Street. Thanks you for joining the show. We gave a lot of great tips, but it's time to go. Take the knowledge we've shared, hope you use it and grow. We'll see you all there at the next episode of the new Black Wall Street. The new Black Wall Street.